Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Amkor technology.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And before we jump into things, just a quick heads up that you can check out StockOracle using the special 14-day trial link right down in the description.
Right, yeah. And we should mention that StockOracle is an AI-aided stock research platform. It's not financial advice.
No, definitely not.
It's not a trading signal service,
Yeah.
and it doesn't give real-time market data.
Exactly. And that link is an affiliate link, meaning the channel may earn a commission at no extra cost to you.
Yeah, and just remember, like with any tool, StockOracle's AI insights and valuation estimates can be incomplete or even wrong.
For sure.
So you always need to verify important facts on your own.
Absolutely. So should we get into the actual analysis today?
Let's do it. So
Yeah.
imagine handing in the absolute greatest report card of your entire life. And because of it, you secure a guaranteed billion-dollar job with the most important technology company on Earth.
That sounds pretty good so far.
Right. But then your parents immediately cut your allowance by 25%.
Oh, wow. Yeah, that hurts.
That is exactly what just happened to an $11 billion semiconductor giant called Amkor Technology, trading under the ticker AMKR.
It's wild, but the market reaction we are looking at today completely defies, traditional financial logic.
Totally.
To get to the bottom of this, we are looking at a lot of different data points. We're pulling apart Amkor's latest earnings reports, tracking live data feeds, and reviewing analyst notes from firms like B. Riley.
Right.
And we're even pairing that financial data with some recent breakthroughs in science to really understand the physical constraints of the AI sector.
Because our goal for today's analysis is to figure out how a company posts a blowout financial quarter, inks a massive deal with Nvidia, and yet sees its stock plunge nearly 25% in a single trading session.
Yeah, we really want to help you separate the emotional algorithmic panic from the structural reality of the business.
Exactly. It's about building that wealth context, right?
Yeah.
Figuring out what is a real risk and what is just noise. So let's look at the actual fundamentals. The report card Amkor handed in for the second quarter of calendar year 2026.
Let's hear it.
The baseline numbers are just staggering. Sales jumped 25.6% year over year to $1.9 billion.
And their core business is just humming along on a longer timeline, too. Their trailing 12-month revenue growth is sitting at a really healthy 12.71%.
Yeah.
But the metric that really stands out in these filings is the profitability. Their gross margin increased by 480 basis points.
Okay, let's ground that for a second.
Yeah.
Because 480 basis points, I mean, that sounds like spreadsheet trivia to anyone outside of finance.
Right. This sounds a bit dry.
Yeah. But in the physical manufacturing world, expanding your margin by nearly 5 full percentage points in one quarter means your factories are running at absolute peak efficiency.
Exactly. You are squeezing significantly more cash out of every single chip that rolls off the line.
And their non-GAAP profit hit 70 cents a share, crushing Wall Street estimates by over 45%.
It paints a picture of a company just firing on all cylinders. I mean, the AI demand ramp is clearly pulling their core business forward way faster than analysts had originally modeled.
So I'm looking at this fundamental data, and I'm expecting the technicals, the stock chart, to look like a rocket ship.
But it doesn't.
No.
Yeah.
Instead, the stock completely cratered. It dropped 24.74% in one single day.
Unbelievable.
It fell from over $60 down to $45.69.
Wow.
And it sliced right below its 200-day moving average, which, for institutional trading algorithms, is basically the line in the sand between a stock in a healthy long-term uptrend.
And a stock in absolute free fall.
Exactly.
Yeah, when a stock breaks that 200-day trend line, the trading bots, they don't pause to read the underlying earnings report.
Right, they don't care about the 480 basis points.
No, they are programmed to hit sell automatically just to mitigate risk. But the underlying trigger for that algorithmic dump gets to the heart of how semiconductor markets operate right now.
That's so.
Well, in the AI sector, investors aren't paying for yesterday's execution. They are pricing in absolute, unquestionable future perfection.
Okay, so I'm putting myself in the shoes of a Wall Street analyst here. If I'm paying a premium for an AI-adjacent stock, I'm doing it entirely on the promise of hypergrowth.
Exactly.
And if a company tells me the growth is slowing down even a little bit, my entire financial model just breaks.
Right.
So what exactly did Amkor say about their future outlook? to trigger this massive cascade?
Well, this brings us to the bear case, the actual catalyst for the drop. They issued their revenue guidance for the upcoming quarter, projecting $2 billion in sales.
Wait, a $2 billion quarter still sounds massive?
Oh, it is a massive number, but it came in 4.1% below Wall Street's consensus estimates. Yeah, the analysts wanted slightly more. And you pair that slight miss with the fact that the broader tech sector is showing some weakness right now. I mean, the NASDAQ 100 recently hit correction territory.
Right, the macro environment is shaky.
Exactly, and the market just gets incredibly jumpy. Plus, analyst firms like B. Riley pointed to some specific near-term headwinds. They noted some softness in the communications segment and some distinct program delays.
I have to push back on this, though. A 4.1% miss on estimates when we're supposedly in the middle of this insatiable, multi-year AI supercycle.
Yeah.
Isn't a revenue miss a glaring red flag? I mean, doesn't this imply the AI bubble is losing air and the actual end market demand is drying up?
See, that is exactly how the algorithms interpreted it, but the physical reality of the supply chain tells a completely different story.
Okay, explain that.
We have to separate lost demand from delayed demand.
Right.
Complex semiconductor manufacturing doesn't happen in a vacuum. A client might need to push their packaging delivery back by a month or two simply because they were waiting on a different component.
Like what?
Like a specialized power supply or a cooling manifold just to clear a bottleneck somewhere else in the world.
Oh, okay. It's like a highly rated restaurant getting downgraded to 1 star on Yelp by an automated bot.
Yeah.
Just because the chef had to push a reservation back by 15 minutes.
Right.
Because they were waiting for the fresh fish to arrive from the market.
That maps perfectly. The diner is still hungry, the fish is still bought, and the meal will still be eaten. The demand hasn't vanished.
It just shifted slightly to the right on the calendar.
Exactly. Wall Street punished Amkor for near-term supply chain friction rather than any kind of structural failure in the AI thesis.
But if this is just a scheduling conflict, somebody must be taking the other side of that algorithmic sell-off.
Oh, they definitely are.
And it turns out that somebody is the most important player in the entire space. Because right in the middle of this market panic, Amkor announced a bullish catalyst that changes everything.
The Nvidia deal.
Yes, a $1.5 billion partnership with Nvidia.
This is a massive capital expenditure deal. It's specifically designed to secure advanced packaging capacity for NVIDIA's high-end AI chips.
Wow.
And it really highlights Amkor's financial durability, you know? They have the robust cash flow required to execute a $1.5 billion infrastructure build-out without just destroying their balance sheet.
We really need to drill down into what advanced packaging actually is, though, because the term makes it sound like we're just talking about putting fragile silicon into a nice padded box for shipping.
Right, like bubble wrap for chips.
Exactly. Why can't NVIDIA just do this themselves or hire any generic manufacturer to build a casing?
To understand the moat here, you have to look at the physics of an AI accelerator. These high-performance chips run incredibly hot, and they process a line-bending amount of data simultaneously.
Tough.
If you try to wire one of these advanced processors directly to a standard printed circuit board, the electrical resistance would bottleneck the data immediately.
And the heat?
The heat would literally melt the components.
Wait, so you can't just plug and play these things like an old graphics card?
Not even close. Amkor is essentially building microscopic, multi-lane superhighways and liquid cooling systems on a foundational layer called a silicon interposer.
The silicon interposer.
Right. They are stacking different chips vertically, often called 2.5D or 3D packaging, and they're placing memory chips mere millimeters away from the processing cores.
That sounds incredibly precise.
It is. Engineering transistors to sit that close together without their electromagnetic fields just destroying each other, that requires billions of dollars in specialized research and development.
Okay, that explains the competitive moat. You can't just wake up, raise some venture capital, and build a factory to do this.
No, you are talking about engineering at the atomic scale. NVIDIA's entire multi-trillion-dollar valuation rests on their chips functioning flawlessly.
Right.
The fact that they are committing $1.5 billion to Amkor means Amkor is one of the only companies on the planet trusted to build the physical interface that keeps those chips from self-destructing.
It is the ultimate technological validation. High switching costs, deeply protected intellectual property, and just unparalleled manufacturing scale.
Absolutely.
By securing this capacity, Nvidia is locking in long-term revenue visibility for Amkor that completely overrides a temporary 4% guidance miss.
Yeah, it
Doesn't it?
completely neutralizes that near-term bear case.
So if the structural thesis is this bulletproof, and the algorithms are just dumping shares over a scheduling delay, the actual valuation of this company must be getting stretched into some very interesting territory.
The divergence is severe when you look at the sentiment and the valuation. Amkor is currently sitting at a market capitalization of $11.54 billion.
Okay.
And when you factor in their trailing 12-month earnings per share of $1.75, you get a price-to-sales ratio of 1.63.
Wow. For anyone who normally looks at software companies, a price-to-sales ratio under 2 is practically unheard of,
Unheard of.
especially for a company deeply embedded in the AI growth cycle that is simultaneously expanding its profit margins.
Right.
The market is pricing this like a legacy hardware business in terminal decline, not an AI infrastructure choke point.
Yeah, the underlying financial health and the stock's price action are telling two completely different stories right now.
Totally.
And while the retail crowd and the automated models are panicking, the regulatory filings show a totally different narrative playing out internally.
This is my favorite part of following the money. We always say you should look at what executives do with their own wallets, not just what they say on a conference call.
Actions speak louder than words.
Always. And over the last 90 days, the insiders at Amkor, the directors, the vice presidents, the people who actually walk the factory floors,
Right.
they have executed net buying of 348,786 shares. We're talking 49 separate buy transactions against only 33 sells, with an insider target metric hovering around $32.50.
Technical analysts track this very closely. It's often referred to as a golden signal.
A golden signal, right?
You have a stock that just suffered a violent 25% gap down. The retail sentiment is completely terrified. The moving averages look totally broken.
Yep.
But the insiders are engaging in cluster buying right into the teeth of that weakness.
The psychology here is just fascinating. If you are an executive and you know the 4.1% guidance miss is actually the beginning of the end.
Like if you secretly know Nvidia's pulling back orders.
Exactly. You hold your breath. You might even quietly sell. You absolutely do not reach into your personal bank account to aggressively scoop up hundreds of thousands of shares of a falling knife.
No, you don't.
These insiders have intimate visibility into the supply chain. They see the timeline for the Nvidia build-out. Their buying spree is them screaming to the market that the algorithms got it wrong.
They clearly believe the future demand is locked in. And to understand why they're so confident, we have to kind of zoom out and look at the horizon. We need to look at where this computational demand is actually heading.
Let's do it.
We know the current cycle is heavily driven by large language models, chatbots, email drafters, image generators.
Sure.
But research out of Nature and the BBC outline a speculative horizon that makes a chatbot look like a toy.
We are moving way beyond AI that just writes a decent cover letter. I mean, the models we use today are essentially linear, predicting the next logical word in a sequence.
Right.
But Nature magazine recently detailed how researchers are using context-aware sequence to function models in genomics to predict complex gene regulation.
Wow.
We are talking about simulating the molecular biology of the human genome.
It's incredible.
And the BBC highlighted mathematicians using AI to brute force century-old Fields medal-level math equations.
See, simulating how a protein folds, or mapping millions of simultaneous atomic interactions in a biological sequence, that requires exponential processing power.
Exponential.
You aren't just calculating one path, you are calculating millions of interacting variables all at once. And to do that, you need massive clusters of top-tier AI accelerators working in perfect, uninterrupted synchronization.
Which brings us right back to the physical bottleneck. A linear chatbot might run reasonably well on a standard serial rack.
Sure.
But if you are trying to cure a genetic disease by simulating billions of molecular reactions simultaneously, the data transfer speeds required between the processors and the memory banks are incomprehensible.
And the only way to achieve that extreme bandwidth is through the exact 2.5D and 3D advanced packaging that Amkor specializes in.
Right, they had to be packed close together.
Microscopically close. They're stacked on those silicon interposers just to keep the latency low enough for the models to function.
So when you extrapolate the hardware requirements for genomic AI and advanced mathematics, That $1.5 billion Nvidia deal looks like a drop in the bucket compared to the global infrastructure required over the next 10 years.
It really shifts the perspective. Building the initial highway system in the 1950s wasn't just about giving the cars of the day a smooth ride.
No, it was laying the physical foundation for an entire century of interstate commerce and logistics that hadn't even been dreamed up yet.
Exactly. Amkor is paving the microscopic highways for the next century of computing.
Okay, so bringing all of this together for our final verdict, we've got the blowout Q2 earnings, we've got the algorithmic overreaction to a temporary supply chain delay,
Yep.
we have the validated moat with the Nvidia partnership, and the aggressive cluster buying from insiders. Taking all of this into account, the overarching thesis here is highly compelling.
It really is. The data yields an 8 out of 10 bullish score for Amkor's fundamental setup.
And for the timeline-focused listener looking at the long-term view, this frames up as a very interesting potential swing setup into the next earnings report, looking toward Q3 of calendar year 2026.
Right. Because Wall Street just threw a tantrum and analysts manually lowered their forward estimates, Amkor's hurdle for the next quarter is artificially depressed.
You have a much easier bar to clear.
Exactly. Plus, if we see macroeconomic rate cuts materialize, that could easily spark a massive sector rotation back into semiconductor manufacturing.
Which will provide a strong tailwind completely independent of Amkor's individual performance.
Absolutely.
So we want to connect this directly back to you, the listener, because it is incredibly easy to pull up your portfolio, see a sea of red numbers, and just feel that knot of pure panic in your stomach.
We've all been there.
But true, well-informed investing means looking past the emotional sentiment of the crowd and the automated selling of the algorithms to examine the underlying physical architecture of a business.
You really have to weigh the upside, like the 480 basis points of margin expansion and the insider buying, against the downside, which is just the temporary noise of a delayed shipment.
As we wrap up today's analysis, we want to leave you with one final thought to mull over. We are watching AI evolve from a parlor trick into a tool capable of unlocking the human genome and solving the deepest mysteries of mathematics.
It's happening right now.
It is. So if that transition is happening today, are we vastly underestimating the sheer physical infrastructure that will be required to run the world a decade from now?
That's the billion-dollar question.
Because when the dust finally settles on this technological revolution, the biggest winners might not just be the software companies writing the code. It might just be the architects building the microscopic highways that make the code possible.
Such a great point.
All right, if you found today's breakdown valuable, don't forget to hit that subscribe button, leave a like, and comment your thoughts below.
And remember, you can grab that 14-day trial of StockOracle down in the description to start exploring these kinds of AI-aided insights for yourself.
Thanks for tuning in to Smart Wealth with Joshua. We'll see you next time.